That means the economy collapses, because the sad part is we've been doing this for 30 years.
Almost impossible. I won't say hopeful, I would say hopeless.
No, just by working and saving, no, I don't see any hope of getting a home.
How can anybody get that when you don't have enough money to cover your basic needs?
Why are we having a junk stocks rally in the cost of a living crisis? The dark side of Canada's real life economy and real estate market. Canada's economy is made up of just a handful of giant corporations with almost zero competition. Since they have no competition, they generally tend to hike up the prices just because they can, and the consumers end up paying more for the worst quality services, while the companies themselves become less competitive on international markets. And you're looking around and you're like, why doesn't my money buy me anything anymore? In fact, like you feel more stressed because on top of all these higher prices, you also have higher mortgage rates. It's never been more expensive to invest into a rental property in Canada. Why not just trade stocks and buy T-bills? How valid are concerns that stocks are becoming increasingly overpriced and pullback is warranted? Why are we having a junk rally in a cost of living crisis?
How you like that? How you like that? Nah. Look at you, now look at me. Look at you.
The cost of living in Canada is truly insane. You're going to have to spend about half of your salary just on rent in Ontario and BC. Most people are spending at least $1,500 a month just on the rent. Toronto came out with a number to be able to live well. You need to earn around $40 an hour to afford a 2-bedroom apartment and $32 per hour to afford a 1-bedroom. But keep in mind, the minimum wage in Canada is around $15. So what's the point of a good salary when most of it goes to the rent? We just received the latest inflation data in Canada. CPI remains at 3.1% unchanged. So why is the stock market rallying? By many calculations, the stock market has returned to rich valuations following one of the best Novembers in market history, and now juiced by fresh optimism for rate cuts, now priced in 3 of them in 2024. Are we really winning this inflation fight? Are we? Or just the stock markets are winning? Winning the inflation fight doesn't actually mean the prices are going to decline. It just means they're going to grow at a slower pace. And so when you talk to actual people and you ask them why they're so angry, it is because the prices are so much higher than they used to be. I bet this is one of the top reasons why people are leaving Canada.
Canada is a absolute dump these days, and it's been going downhill quite rapidly for the last few years. So I personally have been sort of redesigning my life to put myself in a position where I should be able to escape within the next couple of years.
A couple of years ago, during the great holiday of 2020, when the world was kind of at peak craziness, I attempted to leave Canada, spent $20,000 to do so. Canada is pretty much a 3-star hotel charging 5-star prices. That's kind of how I like to describe it.
You can see it in the city. I live in downtown Ottawa, and ever since the old pandemic, the restaurants, the bars, everything is dead. Nobody can afford to go out anymore. And home prices and rental prices are absolutely insane right now. And I've been following the rents here in Ottawa. For a nice 1-bedroom condo, a few months ago, you're looking at about $2,000 a month. And now you're looking at, $2,300, $2,400 a month. So the rental prices just keep increasing. And you're seeing this trend with real estate investors and home builders as well. You cannot find properties that cash flow here. So landlords, real estate investors, home builders, they're all leaving Canada and taking their money down to the United States to invest. But just the overall sentiment in Canada right now is it's a dark place when it comes to finance.
Because without that difference, or like 2 months that I spent in Asia, I wouldn't have noticed how different it was living in Canada. The people were a lot colder, they kept to themselves, plus the temperatures was very cold. So basically it just felt very cold to me to be here, whether it was the people or the environment. And then I really wanted to move back to Asia right away, actually.
Surprisingly, Canadians pay more than almost anyone in the world for a number of common things like groceries, banking fees, cell phone plans, air travel. The cost of fuel in Canada is a lot more expensive than in the US. This is not an accident, but instead it's a direct consequence of the fact that Canada, more than any other country, is dominated by monopolies and oligopolies. Like groceries, where in the years leading up to the pandemic, grocery prices hardly ever changed. They'd occasionally have a spike if there was a drought or if a flu or some kind, but really they were almost exactly the same for years and years. And then if you look up from January 2020 to now, grocery prices are up 30%. And there's much more than this. So while governments in most countries try to prevent companies from becoming too big, Canadian governments generally try to help them to achieve exactly that, too big to fail as a result. We've had one of the most aggressive increases in rates that we've ever seen. Those are still propagating through time for us. We've totally increased the cost of capital in this world. We've got this maturity wall of all these corporations that are going to re-rate. We've got tons of consumers that are hanging on by their fingernails right now.
The Canadian dream has come crashing down. The number of students from India applying to study in Canada has dropped dramatically in the second half of this year. You may think the recent diplomatic row between India and Canada is to blame, but there's more to the story. If you open social media, you will be inundated with videos of students sharing their grievances. They are criticizing the stifling costs of living. They are calling out the lack of opportunities promised. They say they are not happy with the career prospects being offered, especially after doling out nearly 19 lakh rupees a year on Canadian education. Here are some statistics. The number of applications for new study permits from India dropped. That's a decline of nearly 40%. Those who are lucky enough to find a space end up sharing it with other students in a basement of some house.
To even get a home now is, $1 million homes. How can anybody get that when you don't have enough money to cover your basic needs? You have to pick your battles of what you do. Yeah. And I mean, owning a home is wonderful. And the new places that they're building, you can't have anything in there but a luggage and a suitcase if you're living somewhere. Yeah. So I mean, it's really difficult to figure out where you're going to live. If you do, you're going to live in a shoebox.
In the downtown core, just within Toronto, it's $1 million up, right? So it's like, how would you ever get to $1 million unless you won the lottery, you did amazing investments but that would still take a long time too, right? So yeah. No, just by working and saving, no, I don't see any hope of getting a home.
If you want to buy property in Vancouver, you need to be making at least $250,000 to even qualify for a mortgage. In other words, buying a property in Canada is now a possibility only for people with exceptionally high income. And the very low sales volume really shows not that many people want to get into the Canadian real estate market right now. We're in late cycle, which just means that very low employment, interest rates relatively high. Yes, the Fed, might be extending the duration of this cycle because of the interest rate cuts for the first half of 24, but the late cycle nature to this economy, which just necessitates quality stocks, it necessitates good balance sheet, good return on invested capital, good free cash flow generation. Right now, we're seeing a lot of junk rally. Because of that kind of retirement of the higher for longer risk. But if you see any doubt creep in whatsoever that the Fed's not going to deliver on the 3 rate cuts, and the bond market has 6.5 priced in, so if that doesn't happen, that's where you could see a lot of that junk give up a lot of its recent gains. So I'm not saying those pockets of the market can't do well. A lot of them very cheap, coiled springs. They have big runs. They're beta, like high beta. However, I think that being very disciplined around valuation and keeping them on a short leash, knowing you're there to effectively rent the position, not to own the position, would probably be a prudent thing to do. So take profit. We have been in a tightening regime over the past 1.5 years or so, right since the beginning of the 2022. But when you look at the liquidity, it's been net positive in most. It declined through 2022, but sort of bottomed in October. And hey, no big surprises. Liquidity started to recover. The market started to recover. It has largely been rising this year. And so we're in QT. But it's not. It's really maybe more like stealth QE. And that may explain a lot of the market's activity this year. There's so many different ways to define liquidity, but we can do these broad ones where we look at things like Fed balance sheet, reverse repo reserves at the Fed, and what you can see is these kinds of patchwork measures of liquidity declined really sharply all through 2022. They rose in 2020 and 2021. Of course, during the Fed super stimulus, they contracted in 2022. And to the surprise of many, they expanded in 2023. Despite the Fed still doing QT, despite the Fed still raising interest rates. You can actually see liquidity drain next year, and wouldn't that be an interesting paradox where we all thought that 2024 would be the year of the Fed cutting rates. Of course, liquidity is going to get better. I think a wildcard scenario would be one where, because of Treasury funding, we're still running record wartime level deficits in peacetime outside of a recession. We've never seen anything like it, and that of course has to be funded. It'll be still unprecedented. And isn't it interesting that now you have stimulative fiscal policy and stimulative monetary policy at the same time, when you're still near 50-year lows in unemployment? So that's a lot of stimulus. And on a year-over-year basis, the fiscal impulse does slow down versus 2023 into 2024. But I think it is an interesting thought experiment. What does liquidity do next year? Because here's the thing that we can observe is that valuations are very correlated to liquidity, and valuations mostly for growth stocks are very correlated to liquidity. They're less correlated to interest rates. The reality is it's not interest rates, it's liquidity that drives the stock market. I don't know if the Treasury has the wiggle room to continue with the bill's issuance, and if that can actually continue to add to the liquidity. I think the Fed will continue to do QT, but that's been completely offset by reserves and other places. Maybe what we find is that, as interest rates fall and people get reinvested, The money comes out of the money markets that could have some dynamics on liquidity. But you know, when you start the year at such a high valuation, and we're trading at 19.6 times forward earnings, and the only time that we've traded above this level, we briefly touched 20 times in July. But outside of that, the only times we've traded above that level was in 2020 and 2021. And then back during the tech bubble were, of course, liquidity driven markets. What happened is volatility got more and more suppressed. People shortening, volatility got coiled, and then all of a sudden, boom, we had a Volmageddon. And we had, you know, really sharp one period of weakness in the market, kind of like set off, you know, a very weak trading throughout the rest of 2018. I'm not saying that's the base case could happen, but I think that investors should be very wary of complacency when it comes to positioning, when it comes to sentiment, and when it comes to valuations. For the lag effect of interest rate, so what will happen is when you get into late 24 and really it hits in 2025, a lot of the debt that was refinanced in 2021 for higher yield borrowers, so lower quality borrowers, does start to mature, and you will have to roll it over, and you will be rolling it over at higher interest rates. The question is, are those higher interest rates enough to truly cause a kind of economic slowdown? It's a good question. I guess we will see, but I would think that you know that's why small caps were trading so terribly right. They're typically high yield borrowers. They do have more floating rate debt. They have more absolute debt, and that's why they're rallying so much, because effectively there's a sigh of relief that maybe higher for longer isn't happening. So I would say we shouldn't become complacent either. Because the big risk for 2024 is that long interest rates going back up. I think that would catch the market the most by surprise. The market that controls all. I think that after so many such bruising years of bond performance in 2022 and 2023, people are really eager to say, now's the time for bonds to shine. Bonds are so back. Is it really though? If not, the pain will be back, and the Canadian housing market will crash. You are such a good boy for watching my video right till the end. Bye.